Ladies and gentlemen, good day and welcome to Mahindra Lifespace Developers Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us on the call today Mr. Amit Kumar Sinha, MD and CEO, Mr. Vimal Agarwal, CFO, and Mr. Ravindra Basu, Head of Investor Relations. I now hand the conference over to Mr. Amit Kumar Sinha, MD and CEO. Thank you, and over to you, sir.
Thank you, Seema. Good morning, everyone, and welcome to our first quarter FY2024 earnings call for Mahindra Lifespace. Firstly, I would like to thank everyone for participating in the conference call. And as Seema mentioned, I'll keep it short and then hand over to Vimal, and then we'll open up for questions. So let me start with 3 key messages from my side. Let me just try to cover first message about how we see the market. The second message is about our summary of our quarter 1 performance, and third one is about our aspiration for future. So let me cover them sequentially. So number 1, on the macro, how we see the industry. We see significant buoyancy in the industry despite high interest rates and despite pockets of slowdown that we see in some of the states and some of the industries. We see a significant buoyancy in the real estate industry, which is healthy for all of us. Residential demand continues to be high. We are seeing high level of absorption across markets, especially those markets that we are participating, core markets for us. There is a large number of new launches that are already launched or in the pipeline. We also see the prices holding steady, and in right places, in the right markets, we see the inflation and the price going well in the same direction. So overall, a healthy market. As you very well know, residential markets and real estate market tend to be cyclical. We are 2 years into this cycle where we see the buoyancy to continue, and hopefully this cycle will be longer than some of the other cycles that we have seen in the past. The last message on the macro from my side is we continue to find a lot of customers who are attracted and appreciated of the grade A developers. There is a flight to quality that we see, and we hope that the organized grade A developers will continue to capture share away from unorganized, less organized players in each of these markets. All in all, it gives me a healthy feel to the market and how we are positioned in this sector. Message 2 is about how we have done in the quarter 1. As you have seen in the announcement yesterday, we had a quarterly sales of 345 crores. This does not include the Kandivali launch, which was planned in quarter 1, but will happen in the subsequent quarters to account for some of the changes in the regulation related to Mother Earth RG area. It also does not include a very successful lakefront estates, our first plotted launch that we did in Chennai. Most of that is captured in quarter 2. But overall, 345 crore captures the sustenance sales of the project that we have launched in the past few years. Part 2 of a business update is the number of launches that we had planned. In the last earnings call, I had mentioned to you that 9 launches are planned for this financial year. 1 launch has happened towards the end of quarter 1, and we are seeing great success in the plotted launch, as I mentioned. 282 plots were launched, 200 sold out in less than 4 weeks. So our first but great success that we had so far. The other 8 launches, and as I mentioned, I'm quite sure of the 9. 8 will definitely happen. 9th one we are pushing hard. But the Kandivali is a key part of our, Kandivali phase 1 is a key part of our launch, which is a large size launch, a project that we are all very excited to be launching later in the year. But overall, we feel very good about where we are today, that we'll be able to launch all these project launches that we have planned in the current financial year. The third part of business update is to talk about the GDV and land acquisition. As we have put a lot of focus on business development and land acquisition, it currently stands at roughly 5,500 crore. There's always additions and subtractions happening based on the negotiations, diligence, and the realization of some of those land parcels into potential launches. We continue to have a very disciplined stage gate process to pursue those land parcels that create value for us and that we'll be able to bring to market in the shortest time frame. The IC business, last part, as you know, had a great year last year. We had 456 crores of leasing in last financial year. It's a lumpy business, given China Plus One theme, given domestic consumption story, given the GDP expectation that RBI and World Bank have put forward. We feel that we'll have more and more interest in our IC business. It's a plug-and-play infrastructure, suits many of the companies. The pipeline is very healthy. We have closed 3 acres in the first quarter in MWC Chennai, but the pipeline is very strong, very long, and we hope to be able to convert most of these in the current financial year across all our IC and IC portfolio. The third part, that was a quick business update, but in the last earnings call I talked about, and some of you had asked me about what is our aspiration, what is our strategy for the next 5 to 7 years. And I just want to cover that very quickly. In fact, we have included some details in the IR presentation that we released yesterday. We've had a strong last 2 years of performance driven by our residential segments, healthy growth across all the core markets. And as I said earlier, this has given us strong confidence that we can do better and can pursue larger opportunities. Our aspiration now is to be 5 times bigger than where we are today. 8 to 1,000 crores of pre-sales in the next 5 years. Obviously, focusing on customer centricity and focusing on profitability as we deliver these projects. This is a significant jump from where we have been in the past, but we feel that given the strategy that existed before, we're doing fine-tuning of that strategy, but that fine-tuning of the strategy has given us confidence to aspire for more. We're also doing the right thing to augment our capabilities. And let me highlight 6 things that I have released in the investor document yesterday, which are critical for us to deliver and execute well on this strategy. The first is the choice of portfolio, as we call it, well-engineered portfolio for our business. It means where we play in terms of geography. We talked about Bombay, Pune, and Mumbai, Pune, and Bengaluru. We talk about customer segments. We're going to play in mid-premium as well as premium segment. And where necessary, we will keep an eye out towards value segment also. Products, what kind of product portfolio we'll have, what kind of project sizes we'll have, and what kind of deal types that we'll pursue. And you heard about our successful wins on the society redevelopment side. The second part is the robust acquisition engine that is critical for us to deliver on this aspiration. One of the good news I'd like to share here is the Thane land parcel, which we have for some time, has received a very favorable IITT policy change, which allows us to practically more than double the GDV value from 4,000 that we had announced to north of 8,000 crore. Obviously, we have a lot of work to do to bring this to the market. It's a mixed-use commercial plus residential requirement from an IITT point of view. But if you want to aspire for 8 to 10,000 crore pre-sales in 5 years, Thane will play a major role in us delivering that. The third part is the customer centricity. Mahindra brand stands for a specific customer promise, and we are going to always exceed that through our designs, through our relationship with customers, through our sustainability and technology solutions. That continues to be the differentiator value proposition for all our customers who trust in Mahindra brand and buy our products. The fourth part of our strategy is to ensure that we deliver an excellence in delivery of the homes and also at the right cost structure at the right time frame. You may smile at it, but I want to be the indigo of real estate, delivering the products that we promise to our customers on time, in line with their expectations, in line with the cost and return that we have internally. We are having a first-time right approach to construction through very credible construction partners and contractors that will ensure that we deliver those promises in reality. IC and IC has always been a key part of our value proposition. This is how we've been able to extract cash and fund our real estate expansion. It will continue to be there. The China Plus One theme, the India consumption story, has given a lot of big pipeline that I touched upon, and we'll continue to mine our IC portfolio to support our residential business. And then finally, future-proofing Mahindra Lifespace through right set of operating model, right set of capabilities, right kind of systems and processes that will set us apart from our competition. Those are the 6 elements of our strategy. I'm happy to discuss more in the questions, but with these aspirations in line now for us, key part is to start executing really well, and you start to see the action of our scale-up journey on the ground in the subsequent quarters. With that, let me pause. I covered the summary of how we see the market, what has been our Q1 performance, what our aspiration is, and how the building blocks of that aspirations are. I would be amiss if I were not to highlight the importance of Mahindra Group's backing to support our aspiration. As you may have seen that Mahindra Group has designated Mahindra Lifespace as a growth gem, which means that there will be a lot of support, a lot of backing, a lot of resource allocation from different ways to support our aspiration. So with that, let me just pause here, request Vimal to jump in from his point of view and share the financial highlights.
Thank you, Amit, and good morning to everyone. Moving on to financial performance for Q1 F24, here are the key highlights. The consolidated total income stood at 110 crore as against 117 crore in Q1 F23. The consolidated EBITDA, including other income and share of profit from JVs, stood at a loss of 6.4 crore as against a profit of 54 crore in Q1 F23. The consolidated PAT after non-controlling interest stood at rupees 4.3 crore loss as against a profit of 75.4 crore in Q1 FY23. Our company has a debt of about 270 crore at India's level, while the cash in hand, bank and mutual fund investment stands at about 303 crores. Our cost of debt stood at about 8%. Operating cash flow for the quarter was 131 crore without including any outflow on account of land or TDR. That's it from my side. We can move to the question answer session, please. Thank you.
So shall we begin with the Q&A session?
Yes, please, go ahead.
We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Parikshit Kandpal from HDFC Securities. Please go ahead, sir.
Hi, Mr. Sinha. Hi, Vimal. Congratulations on a decent quarter, sir. Thanks for outlining your strategy for FY28. First question is on the 8,000 to 10,000 crores of guidance. Quite a jump. So, wanted to understand, right now we've been doing GDP addition of 3,500 crores a year. So, now to meet this number, there needs to be almost 3 to 5x jump in this number as well to reach this target of 8,000, 10,000. So, how is the organization geared up to deliver those kind of numbers?
Sorry to interrupt, Parikshit. There is a lot of disturbance, so not able to make out. Can you just repeat, please? Thank you.
Hello. Is it better now?
Yeah, let's try that, yeah.
Yes, sir. I was saying that thanks for outlining the strategy on 8,000 to 10,000 crores of pre-sales by FY28. So, obviously, this will involve 3x to 4x jump in your GDV addition, which is right now at about 3,500 on an average ballpark annually. So how is the organization geared up to deliver those kind of numbers? Because we need to have at least a trailing kind of a GDV book of almost 4 to 5 times of the numbers which we are looking to deliver on pre-sale.
So, Parikshit, if I understood your question a little bit clearly, that the aspiration is clear, but what are we thinking about the GDV additions and how do we want to, pace that GDV addition, right? Is that the question?
Yeah.
It's a very valid question, and that's something that we have already started working on internally. So, for us to do a 8 to 10K, I think we'll need to target 40 to 50,000 crores of GDV, a simple thumb rule. And we have categorized different types of deals that we need to construct and win, and we call them 4 categories. The first category is mega deals, which is large deals, like Thane is something which is really large deal, anything more than 5,000 crores. And we need to have 2 to 3 of those. With Thane, we already have one in the pipeline, which we already own. The IITT policy helps us. So of the 40,000, let's say lower end to start with, 8,000 is just one mega deal. Then we have category A, category B, and category C. Category A is anywhere from 2 to 5,000 crore GDV. And we need 4 to 5 of those. 3 of those we already have in pipeline, including Kandivali that you think that you already know about. Citadel you already know about. We're launching the subsequent phases. Category B, because these larger deals tend to be in, let's say, in Mumbai and obviously large land parcels in Pune and Bengaluru. But typically in Bengaluru and Pune, you'll find category B, which is 1,000 to 2,000 crore, or category C between 500 to 1,000 crore deals. So we expect 5 deals of category B and 15 deals of category C that we need to construct and win over the next few years. And for us to achieve this, as I said, on the mega deal, we already have one. Similarly, we have a few for category A, category B, and category C. Now, the question is, how do we create an upstream pipeline, which we are working hard. We are looking at all kinds of outright JDA, society redevelopment, and innovative structures to pursue that. A very large pipeline that we have already created, a very disciplined stage gate process, and that's allowing us to give us confidence that we'll be able to get to 40 to 50K GDV over the next few years. 5,500 crore that I mentioned on the call does not include Thane, so that's already 30% there in terms of where we are today.
Okay. And in terms of timelines, I mean, are these closures now be more, instead of being like more lopsided towards like a particular year end, will this be more streamlined over the year financially? Because last deal we heard was in April, which was that Malad deal. After that, nothing has really happened. So in terms of like announcements, in terms of closures, how do you see the rest of the year panning out for you, like Q2, Q3, Q4? So any deals happening in Q2, or will be more now H2 kind of a thing?
My sense is you'll start to see more action in the subsequent quarters, including current quarter. But you're right. I think we are very careful with the choice of deals. It needs to meet obviously our IRR return threshold, but also you have to negotiate very well with the landowners in terms of what their expectations are. And the last thing I want to do, Parikshit, at this time is at the peak of the cycle buy at the highest prices and then bring them to market when the cycle is on the other side. So we're very careful about thinking about the location, the micro market, the commercials, the pricing impact, the IRR, and those negotiations do take time. But I feel that you'll start to see the outcome of all these efforts in the second half of this year.
Okay. My last question is on the launches. So I know this Mother Earth issue has been going on. So any update on the hearing or Supreme Court hearing on this? And when do you expect to launch this? And what will be the phase 1 launches of both Citadel and Kandivali for this year?
Yeah, so it's a great question. In fact, this is Kandivali is a key part of our launch. So we are not waiting Supreme Court decision. We already have a backup plan that we're executing. We expect to launch this in the end of Q3 as of now.
How much you're going to open in this phase 1? So I understand this will be almost 2,500 crores GDV.
Phase 1 is worth 1,200 crores of GDV.
How much? Sorry, can you repeat it?
1,200 crores, roughly 1,200 crores.
In Citadel? Citadel launch and Citadel phase 1 will be how much?
Yeah. Citadel phase 1 is launched. Phase 2 is very close to will happen. Hoping that quarter 2 we are able to launch, but towards the end of quarter 2 or early quarter 3, right? Just, the approval process just can't predict. But what was your question, Parikshit? Was the timing or the value? What were you asking?
So both the timings which you clarified, and in terms of value, I think still there will be about 2,000 crores plus of GDV left over here. So how much will be the phase 2 of this project?
So phase 1 is already launched. Phase 2, which we are expecting to launch end of this quarter, is about 700 to 800 crores.
Okay, sir. Thank you. Those are my questions.
You got this right, because these are the two of the three largest launches that we have in the current financial year.
Yeah. I think the momentum here, depends on the price point. If we are able to do it, we could see a big success, and that could add to the Q3 numbers. So my estimate is that Q3 is going to be really big for you. We should make up for almost 70-80% of this year's pre-sale.
Correct.
Hopefully it happens. Thank you, sir.
Yeah, we also hope the same. Yeah, absolutely.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Adidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good morning, everyone. So just a follow-up question on Kandivali launch. So where are we exactly on the approvals now, considering whatever the Supreme Court judgment on the RG areas? And you said end of Q3. So what is the now launch contingent on in terms of the approvals? That is the first question.
Avidev, I think we are following the two-pronged strategy. I think the two-pronged strategy, if the Supreme Court judgment comes favorable, we already had IOD, we were ready to launch in a short period of time. We just had to get EC and RERA registration, but the IOD was done. So we were very close, but we held it back because of the Supreme Court decision or the imminent decision. However, given where we are today, we said let's not wait for the legal process to come through one way or the other, because there could be delays that we can't control there. So we already developed a plan B to say that if the judgment comes out which forces all the developers to abide by the 25% RG rule on Mother Earth, then what should our design be? Our designs are already, we have redesigned the project. It's complete. We are in the process of reapplying, and the approval process takes anywhere from 3 to 5 months. So we are accelerating that at our end, but that's why the expectation is that if the ruling doesn't help us or gets delayed, we are ready with our plan B, which should have a launch at the end of quarter 3.
Okay, sir. Yeah, that is helpful. Second question is on our geographical diversification. Obviously, we have so far stuck mainly to Mumbai and Pune as markets and a bit of Bangalore. So to get to this 8 to 10,000 crores of sort of GDV over a longer term, have we thought about any geographical expansion beyond what we are focusing on currently?
Yeah, so, Abhinav, I think I'll give you some data. So right now we are focusing on MMR, Pune and Bangalore. I think we believe that we can attain 10,000 crore, 8 to 10,000 crore across these three markets. The MMR market is currently roughly 100,000 crores and we have 500 crore, so we have a 0.5% share. In fact, the largest guys load have 7 to 8%. Have a 7 to 8% share, and all the organized players combined are less than 20%. So there is a significant opportunity for organized players to grow their overall share in this market alone. And if we target 4 to 5% market, which is a modest 4 to 5% in 5 years, that itself will give us 5 to 6,000 crore. Because by 5 years, this market will be 150,000 crore. So we feel that that's attainable given given what I talked about, Kandivali, Thane and a few others that we have in the pipeline. Similarly, Pune is roughly 60,000 crore, Bengaluru is 70,000 crore, going to be by 2028. And we feel that if we are able to get 2 to 3,000 of the market in 5 years from now, that allows us to get 6,000 from Bombay, 2,000 from, let's say, Pune, 2,000 from Bengaluru with some puts and takes. And we will go deeper in these markets rather than trying to spread ourselves too thin across more markets. As you know, depth is more valuable in this market than breadth. And if we feel that we have attained the market size in each of those markets, which makes us strong, then we may look at another market. But at this time, we feel that focus alone will give us the aspiration that we currently have in mind.
Okay, sir. And sir, last question is on this Thana land parcel now with whatever the policy changes which have come through. So by when do you think is earliest that we could see a formal launch of this project, and what are the approvals and other things you need to go through to get there? Yeah, broadly, if you could just tell us.
Yeah. Yeah, so it will take 4 to 6 quarters. 4 quarters if you are very lucky, 6 quarters from now. Given IITT policy comes with some conditions and some approval requirements that we are working on. So it will most likely be next financial year.
Okay, so by that current timelines, the second half of FY25 is a reasonable assumption, right, when this project could see the first phase being launched?
Yeah, that's a good assumption, Abhinav. That's a good assumption. And in fact, it has two parts, Abhinav. As you know, 50% is towards IT, which is mostly commercial, 50% is residential, and the policy currently says that for every million square foot of resi, you need to deliver a million square foot of commercial. So it requires us to carefully do the planning so that we are able to bring both to the market and meet with the policy guidelines. And that requires us to work on this deal contours, smartly and creatively.
Sure. That's pretty clear. Yeah. Thank you and all the best. Yes.
Thank you.
Thank you, sir. The next question is from the line of Mr. Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi. Thanks for the opportunity. Firstly, just continuing on with Thane. So you said 50-50 split between IT and residential. Even the development has to happen simultaneously. So if probably if we are not planning to do commercial right now, if we are looking for a partner, can we still start development of residential and maybe later on take the development of IT?
So this is a good question, and that's exactly we are navigating, because the commercial the policy as per our understanding today, and we are trying to clarify it, it's very recent, is the following. It seems to imply that the delivery has to be together. Okay, so it's not the construction or launch, but the delivery. I can't offer possession to residential customers, still I have done equivalent, let's say, delivery on the commercial side. And the commercial construction cycles are much shorter compared to residential. So we will have to think through how we navigate through this, but something that we are working through it right now.
Sure, got it. And this 8,000 crore would again be split 50-50, 4,000 crore each, residential and commercial, right?
Yeah, actually the FSI is very high. In fact, the FSI is probably double of what we are trying to consume. So if you look at, like, if you were to theoretically multiply the FSI available with the prevailing price in the commercial and the residential side, it will be even higher, much higher. In fact, more than 50 to 75% higher. But for us to leverage that land parcel, which is a very pristine land parcel with a lot of greens adjacent to Sanjay Gandhi National Park, we are not planning to consume all the FSI. We want to make a great product that residents will love, corporates will have a great choice of grade A space. Obviously, we have to work on the commercial aspect of it, but it could be a walk-to-work kind of a project that we are thinking through. And those require careful design consideration, commercial consideration, and making sure that we abide by the policy contours.
Got it. That's helpful. And just to clarify on your 5-year strategy, 8 to 10,000 crore of sales would obviously also include IC and IC. What's the contribution split between the two? I mean, IC and IC, would we expect to go to 2,000 crore in next 5 years, or 500,000 crore is what we are thinking and rest would come from residential?
IC has, we will, it's going to be closer to 500 crores annually. But that's a business which is very lumpy. It's something which is very located in specific geography. If we had land parcels across the country, I can say that I can grow it. We have it, as we have articulated strategically, our goal is to use the ICICI land banks and the infrastructure that we have to generate cash that allows us to build our residential business. So I think we are going to smartly manage how we want to sell, at what timing and what prices, but it's not going to be anything significantly more than 500 crore annually.
Sure. Got it. So large chunk of it would come from residential itself. And just lastly on, the margins, not talking about the current ones, because I understand the lag between what we recognize and what we book actually. But in terms of, our target for the acquisitions that we do from here on, we have been guiding about 15 to 18% kind of EBITDA margin. But should we, target are we going to target industry equivalent margins of around 20% and above from the launches or acquisitions that we do from here on?
Yeah. So, I think two parts to your question. I think what you see in numbers is a lagging reflection of what happened 3, 4, 5 years back. So it's the accounting rule that gets in the way of real economics. But the way we think about it is exactly what you articulated. We are aspiring for growth, but something that will not do at the expense of profitability. I think even at Mahindra Group, given my previous role, a profitable balanced growth is what we aspire for. And in our projects we target the range that you just talked about as IRR, but as a company we are always looking for 15% ROE for the overall company. And that takes into account the project that have started earlier, but also the project that we are starting today. So that's how we want to instill financial prudence in our decision making for future launches as well.
Sure. So ROE target is what you keep in mind rather than the margins. Or what kind of implied margins does this 15% ROE target have?
I'll request Vimal to jump in here.
Can you just repeat once?
Yeah. So I was asking, this 15% ROE target, is it the target that is it the only target that you run with? And what is the kind of implied EBITDA margin that this 15% ROE target has? Is it still like 15-18% or higher than that?
Yeah. So this 15% ROE number is sort of group mandated number across all growth gems. To that extent, our aspiration will be to breach that number in the years to come. Now, the other point on EBITDA margin or IRRs, it fundamentally gets driven at project levels. For example, our project IRRs will be upwards of 15 irrespective of the project and the location or the geography we are getting into. Our gross margins usually will be 20% plus after taking into consideration all the costs which are at direct level as well as the allocation which comes so far as that project is concerned.
Sure, got it. That's it from my side. All the best.
Thank you for this.
Thank you. Our next question is from the line of Mr. Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. Few clarifications as far as, the launch of our redevelopment projects and Dahisar. Are we on track for the same?
So, Shreyans, great question. We have two society redevelopment projects in pipeline. The first one was won in January. The second one was in April in the Navy. The first one is Santa Cruz. We are targeting the launch of both the projects in Q4. However, I'll be honest, it's a learning for us. It's very different from just buying a land parcel. In this case, in one society we have 70 plus residents, the other society we have 170 residents. For us to get clearance, we need to make sure that the contract with each and every individual homeowner who's staying in that complex is done. We want to do it in the right way. We are not trying to find a shortcut to accelerate. We want to be doing the right thing with each of the existing residents as well as buyers. So my sense is both of them should happen in quarter 4. But I'll update you at the end of quarter 3 if you are able to, if you are facing some hurdles in getting them off the ground. But it's a key priority for us. My teams are very focused on making sure that we bring these to market before we start signing any new major redevelopment projects.
Sure. And as far as Dahisar is concerned?
Yeah, so Dahisar is something which we have not included in the current financial year because it's still awaiting some approvals without which we cannot move ahead. So we are awaiting for those approvals.
Got it. Second is on our IC and IC part. This quarter was on a very soft side. So any particular reason for it, and how do you see, the full year panning out?
Yeah, so, this is a business which is lumpy business, as I touched upon earlier. We have a very healthy pipeline, Shreyans, and they will start to convert in the later quarters. After the financial year end, things slow down typically as we have seen. You probably saw there was a huge deal that we signed in quarter 4 in March, very end, like even the last day. My sense is the China plus one, India consumption story, India growth story actually is real after a long time. We will see deals that are coming through, and I have a huge amount of LOI that I see. Converting it is something that we are working hard. As you know, we tend to be, we have a bit of competition from some of the other cheaper sources of land parcels that are provided by, let's say, local and like government and GIDC, MIDC kind of equivalent. So we have to make sure that the customers understand the value proposition that we provide, and there are certain segment of customers that really love us. And that is working well for us. So we wait for the right customers. There is no reason for us to be hasty in offering our pristine land with all the infrastructure at the lowest price point. So we are always waiting for the right customer, but it tends to be lumpy, and hopefully we'll see more action given the pipeline that we see today.
Got it. And lastly, any new updates as far as our Actis deal is concerned and Orient, Ahmedabad and Pune?
So 3 questions, I think, right? Origins Ahmedabad, Pune, and the Actis deal, right? So I'll ask Vimal to jump in for the Actis deal. But the Ahmedabad, that's something that we are always looking for the right client. We have gotten a lot of interest from very small clients. We are awaiting the right anchor client. It will not make sense for us to start developing that land parcel, given where it's located, with a small 5-acre client. We want to do it with a 50, 30 or decent size. But we're also thinking about how best to monetize Ahmedabad. So those discussions are underway. Bhor is a key priority for us. We are addressing some of the contiguity and access issues. We should be able to bring to market in the next 12 months. We are pushing for this financial year, but it will be tough for us to get it in this financial year. So around this time around, we'll start to launch Bhor. The location is fantastic. It comes, it's like 25-30 kilometers from Pune. Given Pune's prominence in the industrial roadmap, we think it will be a blockbuster success as soon as we are able to bring it. But even some of the guys who own the contiguous, who own the land that is preventing the contiguity, they also know that. So that's the problem that we are trying to solve on Bhor. I'll request Vimal to jump in on the BTS side.
Yeah, Shreyansh, so far as the build-to-suit industrial and warehousing platform is concerned, as I had updated last quarter, the management team is in place and they have come out strongly. We are evaluating multiple land propositions and proposals. With the India logistics policy getting announced, huge focus on infra development and all, we continue to believe that we are in sort of good industry per se, and you should see some action in the next 2 or 3 quarters on that front.
Got it. Thank you. That's it from my side. All the best.
Thank you.
Thank you, sir. The next question is from the line of Mr. Rohit from Marshmallow Capital. Please go ahead, sir.
Thank you for the opportunity, and thank you for such a detailed articulation of the strategy. It's very helpful. Now, I want to refer to your commentary in my question. So you mentioned that we are in the second year of the RESI cycle right now, and coupled with the fact that we are planning to hit, we are targeting 8,000 to 10,000 crore GDV 5 years out. So it will be the 7th or 8th year of the cycle at that point in time. So I'm just curious, because you also mentioned in your opening remarks that the cyclical sector, right? So you're talking about 7th or 8th year of the cycle where if you're doing so well, the others also will be doing well, and the markets can be quite good. So how do you marry discipline in underwriting and reaching the target so late into the cycle? So how do you think about this angle in your strategy?
Yeah, no, it's a great question, Rohit, and I'm glad you asked. I think this is where I worry a lot about signing the wrong deals. And that's why I think an earlier question talked about, I think Parikshit, you asked that question. If you buy at the top of the cycle and you sell when the cycle slows down, your economics go down the drain, literally. And that's something that we really want to avoid. So given that, we are very careful and we have a very detailed analysis of each of the micro market within the 3 cities that I touched upon where we participate. So Bangalore, Pune, they have very healthy absorption. MMR has healthy absorption, but in certain micro markets. So we are carefully choosing where we want to participate, what is the product that we want to bring in, what is the right price point given Mahindra brand promise and the location and the competitive nature of that. So all those things go in our assessment as we look at the business case underwriting for what we are trying to, the GDVs that we are trying to build in. Now, we are definite that we will hit a pocket of slowdown in the next 7 years. Now, question is, how do we accelerate? If you sign the deal, the question is, how do we accelerate bringing them to the market? So at least we lock in the initial sales velocity and able to sail through sustained. But the last part for me is the market today, as I touched upon, is very large. In Bombay is 150,000 crore by 2028, 100,000 plus today. All the organized players today together are less than 20%. 80% are local or maybe at best regional developers, right? Given RERA, given GST, given all the other, let's say, let me use the word constraints that they have to manage through, I see a consolidation or exit happening for many of them, and that allows that gives the organized players the opportunity to capture that space pretty quickly. And if we are able to do that, we will have no challenge achieving the aspiration. No doubt we have to sign the right deals with all the analytics that I mentioned. No doubt we need to be prepared for a slowdown when it happens. The question is not if, it's a question of when it happens. But then the macro sentiments are favorable for us to capitalize on.
Perfect. Thank you so much. This is a very helpful answer, and I'll probably keep asking every year or so to understand where we are in the cycle. My second question is, you touched a lot upon, it was very heartening to hear you touch a lot upon how we will enjoy the Mahindra Group support, and we are seen as one of the growth gems. I've been investing more than 3 years, and this is great to see. And you can also see that evidence in the Kandivali parcel, and probably more such parcels hopefully will come through for us. So in this aspiration, when we talk about support, do you see us requiring some sort of capital infusion, and you see that coming from the group level? That is one. And second, one observation is, in general, we don't see much of private equity infusion into the residential space at least. We do see it in other spaces in the real estate sector, but not so much in residential. So do you see that Indian real estate or Mahindra residential real estate getting interest from private equity going forward? So 2 questions broadly on capital in general.
Yeah. But that's a great point, Rohit. But let me just touch one subtle point that you talked about Mahindra supporting us. Mahindra is very supportive, but when it comes to selling land to us, it's an arm's length and to negotiate as hard as they do from their side. So, this is true economic value given they are kind of, while they are majority shareholder first, all the transaction at arm's length, including the Kandivali, where we had to really negotiate hard with them. So on a lighter note, they are not as easy as a counterparty. But on the capital side, I think all sources are open. And let me touch, we already have strong accruals on the residential side. We have IC and IC which generate a lot of cash which allows us to fund our residential growth. We have a healthy debt to equity ratio that gives us the opportunity to take debt if we want, when we want. We are also looking at platforms. You rightly touched, there's not been much private equity interest on the resi side because most of that interest went to the commercial side, right? And commercial a little bit slow and probably tapped out with the biggies already taking a space or a part of the action already. We are starting to see a lot of interest from the private equity players, especially the patient capital on a resi platform. The issue tends to be how do you exit them. So we are working with some of the potential investors, private equity, patient capital partners to see how we can structure the resi platform. Early stages, but a lot of effort is starting to go in that direction because our 8 to 10K will require us to find alternate sources of funding for the interim peak that we'll face in 3 years from now. And that's something that we're starting to think already. So that is a great question, but I will have concrete answers in the subsequent quarter, but at least theoretically this is how we are solving it.
Thank you. So last question from my end is this target of 8,000-10,000 crore. So what does it mean? So let's say we have many models. Like we'll have JDA, joint venture, we'll have outright land purchase. Are there any other formats? And when we say 8 to 10,000 crore, is it let's say there's a JDA where we have 60-65% of the economic share, right? So is this only our share of what will accrue to our P&L that we count as 8 to 10,000 crore? Or is it whatever is branded as Mahindra product, the entire project GDV, that is the sales booking number that will be considered under 8 to 10,000 crore?
Yeah, so that's a great question. I think when we look at, so there are 3 kinds of deals that we predominantly do. We do outright purchase, we do society redevelopment, and we do JDAs. And in our, as I mentioned, mega deal category A, B, and C, we also modeled what would be the typical percentage that we want to adhere to for JDA, for outright, and for, let's say, society redevelopment. At least in Pune and Bangalore, it will be mostly outright. In Bombay, you'll see more of JDA, more of society redevelopment. Some in different parts of Bombay, Mumbai, you'll see outright. This number that we have includes total, at least on the pre-sale side. And in the financial that we'll report, we'll have the reflection of each of these three types of deals. But at least we want to make sure that in the sales part, we're reflecting the true economics.
Understood. So the pre-sales of 8,000 to 10,000 crore is the total, even if it is a 60% GD or something like that, we'll be taking the whole 100% pre-sales value in our target. That's what we mean, right?
Yes, theoretically, yes, but we'll not have 50%. We'll probably be, from a financial return point of view, it will be tough for us to make the returns work, right? So we have factored let's not use exact, but lower percentage, much lower percentage than what you said.
Sure. No, I was just using an indicative number, but yeah, thank you. That's it from me. It was a great call. Thank you so much for your time.
No, thank you, Rohit, for your questions.
Thank you, sir. The next question is from the line of Mr. Himanshu Upadhyay from O3 PMS. Please go ahead, sir.
Yeah, hi. Good morning. Am I audible?
Yeah, we can hear you.
Yeah. See, if one thing which I appreciate this company, okay, is the point number 3, okay, in your growth strategy, okay, and which is that if we look at your customer centricity versus peers now, historically you have been always highly rated, okay, on that spend, and your rating in terms of peers has been always good in most of the micro markets where you have been there, okay. One or two places it may be there, but it happens in a business of capital allocation, okay. But I would say overall, we have been generally better than most of the peers in most micro markets, okay. But even if I have historically, and this is not just today, okay, this has been 5 years back also, and even 7-8 years back also when I started tracking this company or understanding this company. But historically, the profits have been generally lower than the peers, okay. There can be two issues on this, okay. One is costing, and the other is we are not able to charge for what we should be getting in the market, okay. How are you looking at it, and the pricing of the finished product or the final product? Are we doing something on that also? Because as an outsider, if a company's product is valued by the customers, I believe it should also be the most profitable company, okay. But in our case, not just today, but historically also, that has not been the case, okay. So either costs are to be refocused or the pricing level we have to take further high. And are we having that confidence to bring the pricing higher than just to also get higher value what we are providing to the customers? So can you elaborate on that part?
Great question, Himanshu. I'm glad you asked, because this is a question I have raised with my teams, and we are creatively looking for ways to address it. And so you touched upon actually 2 points, but let me just try to address 2 and maybe add one more thing. Pricing, is something that is a balancing act, and many times, even though we know that we are leaving money on the table, we do it for the reasons of velocity, so that you can upfront cash. And the question is, what is the right price point? Where would the pendulum swing? Which is the right middle ground? And that's something, given the Mahindra brand promise, given all the things that you touched upon in terms of trust we carry with our customers, we always feel that we are leaving money on the table at times. And we will try to fine-tune that. I don't think we'll ever be able to capture 100% of that money that we are leaving on the table, but we want to know how much money we are leaving on the table for the sake of velocity, not from a value proposition point of view. So we're going to do some experiments, we're going to do some attempts at different launches to see what is the best way for us to capture the right price point for the value proposition we offer to our customers. But we also have to keep in mind the velocity to fund the cash flow needs of the project. So that's the balancing act on the pricing. It's a very sophisticated effort that we have. Vimlendra Singh, who's the head of our sales, pricing and customer experience and facility management, is actually working very closely now with Vimal Agrawal, CFO. So they sit on the opposite side of what the pricing should be for us to deliver the IRRs that we seek. The other point you raised is on the cost side. I think we've had issues, honestly sharing that what we planned for a IRR at the start of the project versus where we ended, we actually had dilution. That's why we now have a costing center of excellence which has been constituted in the last 6-9 months, 1 year. We also have a contracting department which is extremely savvy in terms of how they contract out. But I think I'm pushing this to the next level, like the ratios of constructed area to saleable area or RNA. I think we can do better at those. And in each and every of our launch, we are going to abide by certain principles which are informed by each city and each city's local laws. And I just gave example of design, the efficiency of the constructed area. But there are, how do you design bathrooms? How do you design your windows? How do you design what kind of tiles you source? All those things are part of scaling our business from a cost point of view, which gives us a much improved cost position. So these two things together should give us better returns, better IRRs, and then a discipline to follow through. What you say at the start of the project, which is the third point, to what you deliver. There should be accountability that we are working through.
And secondly, we have stated about reevaluating capital allocation at the Mahindra Group, okay, and that has happened, okay. But in our case, we are into IC, where the margins are high, but the cycle is very, very long, okay, and the risk is long cycle.
Lost the first part of your question. Can you say what Mahindra Group capital allocation? We didn't hear that.
No, so what I stated was, in last few years, Mahindra Group has focused on capital allocation and improving the return ratios. Okay.
Correct.
And in our business, where we see we have 3 models. Okay. One is IC, where the margins are high, but a very long cycle. Okay. And long cycle is the bigger risk. Okay. And the happiness, where the margins are low, but velocity has to be very, very high to make the money. Okay. And the third one is our what we are doing, or mid-premium housing. Okay, are we looking at doing the capital allocation, or have we reevaluated our capital allocation in all these 3 businesses? Because even when we look at your pending inventory, okay, in the case of happiness, if the project where IRR are very tight, and if my inventory of 55, let's say in Boisar, and we say 79 in Palghar 1 itself are pending, my IRR can get a very, very strong hit, okay? And the way the company is, and we are process oriented, and that can take time. Are these 2 business model really important for us? And have we thought about our capital allocation strategy? And see, 1800 crore balance sheet is good, okay? No leverage. But if you want to go around 8 to 10,000, and you are yourself saying that you need 40,000 crores of deals for that business to grow, are we going to, or is that business getting sacrificed on these 2 businesses which are slightly more riskier also in terms of IRR? The execution does not happen. Hello?
Yeah, Himanshu got the question. Let me ask Vimal to jump in, and I'll comment after that if I need to.
So, fundamentally, Himanshu, 3-4 points here. Starting from the fact that capital allocation, very, very focused, do not intend to get into business segments, projects, or geographies where we believe that the IRR will not get delivered, and I'm emphasizing on the word delivered here. That's one. Second, you talked about IC business. The very fact that we are not going whole hog investing into further expansion of IC business with eyes closed and focused on increasing the velocity or cash upstream efforts fundamentally sort of should give confidence to all of us that in terms of approach, we are on track. You talked about Boisar and Palghar. I just want to reassure you that the numbers will be high because the sheer typography which we have or the location we have, the values are almost insignificant in the overall scheme of things. Kalyan 1 was the biggest affordable happiness project we did, where we had sold about 80% inventory at the time of launch itself. The other thing is, if you were to go back and you talked about 1,800 crores of balance sheet size, if you go back and look at our balance sheet, say about 3 years back, there used to be a long list of assets which was there in the balance sheet but not really actively contributing towards operating cash flow and therefore delivering our IRR or ROE aspirations. In the last 2.5, 3 years, we have unlocked many of those assets, and that the intent again is to sort of, even if I don't make significant PAT, let me just get the cash in, deploy it back so that I can make that money work for newer projects. And fundamentally, therefore, the key point is that we continue to be extremely mindful of the investment and the choices we are making, and that will be the theme as we deliver on this 8 to 10,000 crores guideline in FY28.
Vimal, if we can just one small thing. We have done happiness in IC business also, okay? If we remove that happiness business in IC and we have taken, let's say, projects at Boisar and Palghar and all those things, are we confident on those type of projects on the whole capital allocation at happiness being upwards of 18% IRRs, which we have bought third party, not the IC land, because that is very cheap land, okay?
Yeah, Himanshu, two clarifications. One is so far as happiness within World City is concerned, that also gets driven by the statutory requirements. That's one. Second is that we do not tend to differentiate between a happiness product, premium or a mid-premium project so far as the financial guardrails and deliverables are concerned.
Okay. But whatever we expected, because happiness is today 7-8 years old product, what we are doing in the market, are we on having that clarity, or are we able to get those IRRs what we would have intended for in the initial launch of this product, or when this was conceived 8-10 years back?
Yeah, so sort of mixed bag. Out of 3 or 4 projects which we have, I'll say that 2 projects we certainly would have overachieved, and 1 or 2 projects we would have either delivered or struggled a little. But like any other, the key point is not differentiating even at operating level, even at delivery level, even in identifying the challenges we have on the affordable or the happiness side, and therefore Amit in his previous conversation did mention that we'll be mindful so far as choosing of the project is concerned, and therefore delivery is concerned.
Okay. And yeah. Anything you want to add? You stated that after anything you would like to add.
I think Vimal has covered everything, so thanks very much.
Okay. And one final question. In last 2 quarters, if we see the collections have been flattish and construction spend has nearly doubled to what was last 1 year, okay? And the surplus cash has been lesser, okay? But as more projects are now to be completed than what we have sold in next 1 or 2 years, do you think the surplus cash would be slightly or lower than what was in FY22-24 when this was around 800 crore between what we were collecting and what we were selling? What we were collecting and what we were doing construction spend, because launches have been generally higher than our completions. Any thoughts on that?
At an overall level, see, the operating cash for the company continues to be strong. Last year, for example, we delivered upwards of 650 crores. And because you are able to bring the product much earlier than, say, what we were doing 2-3 years back, our ability to launch, get initial bookings, and therefore the cash collections are fairly strong. I hope that our work done and construction expense continues to grow, because that is reflective of the health of the project execution engine which we have. And to that extent, whatever surplus comes in will certainly get redeployed for the new land acquisition, and hopefully we'll get much more headroom to acquire more and launch new projects, and therefore the base will further go on.
Okay, thank you. That's all from my side.
Thank you, Himanshu.
Thank you, sir. The next question is from the line of Mr. Prem Khurana from Anand Rathi. Please go ahead, sir.
Yeah, thank you for taking my question. So most of my questions are already answered. I mean, there's a couple of questions and mostly sort of clarification. So first one was on our deal pipeline. So when I look at the number, I mean, it's been in the range of 5,000 to 5,500 odd crore rupees for some time now. And I understand it was deliberate because we were looking to add 2,500 crores on a yearly basis. So wherein, I mean, the number would have been able to suffice. Now, given the fact that they've given us a strategy, long-term strategy, wherein we intend to kind of scale to 8 to 10,000 crore rupees of number in terms of residential real estate, and you would need at least 40,000 crore rupees of GDV to be able to manage that number. When do we start seeing this number and 5,500 odd crore rupees? I mean, when do you think, I mean, it'll start moving up, which is where, I mean, you'll be able to build the pipeline in time to be able to kind of scale to that number? I mean, is it that next year onwards, or I mean, you would want to wait for some more time to see whether the cycle would stay like this and then take a call, or how I mean, how does the situation, I mean, how does it look to you, I mean, in terms of timelines that you would need to be able to start scaling up your deal pipeline?
So a great question, Prem. I just want to clarify two things. First is that 5,500 did not include Thane, which is 4,000 before last month. Now, Thane itself is 8,000. So, while we're keeping it out, you can just for clarity, and you can assume that 8,000 plus 5,000, that's a big GDV pipeline that we have. Obviously, there'll be some puts and takes. Some we will convert, some we will lose because the final negotiations are on. But as I mentioned earlier, we right now have enough to chew. GDV allows us to create the pipeline for the next year. So, and I just don't want to rush into any transaction given the point I made about we are peak of the cycle or the top of the cycle. I just want to be thoughtful and careful of which deals, which locations, which deal contours we end up signing. So you'll start to see the news in the next, let's say, quarter, 2 quarters, but don't want to be hasty in closing the deals and then repent that we got a deal that was too expensive for us from a return perspective. But just want to make sure that 5,500 is not the full story. You have plus 8,000, but also we have a discipline process that will always follow.
Sure. And just to continue on our long-term strategy, so I understand, I mean, in terms of finance, I mean, we won't face any issues because of the visibility that we have in terms of surplus from our existing projects plus and the group support that you spoke about, I mean, earlier in the call. And even in terms of, I mean, deal again would not be a problem because, I mean, we have that kind of opportunity size in India. But how about, I mean, the other resources, especially the manpower? Because when you want to scale from, let's say, 2,000 to 8,000 odd, I mean, you would need more people on your side, right? And what we're seeing is essentially nowadays, I mean, it seems as if it's been a little difficult to be able to find right talent because the industry is growing and everyone is looking to kind of hire more people. So how easy or difficult is it to be able to find right talent today? I mean, given the situation, the way it is, I mean, the kind of exuberance that we have on real estate side.
That's a very valid question, Prem, and I'll put my previous jobs hat, like when I was at M&M, head of strategy. I think we have a very strong brand pull. Not only the question that Himanshu asked from a customer point of view, but from an employee point of view also. Given what has happened in some of the other sectors, especially tech in the last 12 months, a lot of not only attrition but also exits as a result of retrenchment. There is I would say, flight of employees to an employer of comfort, employer of confidence, somebody who will give them a career. So that is a good, very strong draw for us. Our brand allows us to do that. But it doesn't take away the fact that for us to grow from where we are, we need to augment our capacity at all levels, and we are working towards it. We've never had issues in attracting people. The question is, now we have the opportunity to give them an aspiration, a dream to live, and I think we'll be able to attract many more employees who will love to participate in this dream and be part of this delivery.
And just one last, if I may please, in our IC and IC vertical, over the last year we've seen DTA move seriously good for us, but then on the SEZ side it's been a little slow in Jaipur, and we still have pretty significant chunk to go there. So any thoughts? Is it possible to be able to convert a part of this and move it to DTA, and the way we did we did that kind of exercise some time back as well. Wherein we had run out of DTA and we converted a part of our SEZ into DTA. So is it still possible to be able to convert a part of this SEZ into DTA, or do we have plans to be able to kind of monetize this SEZ? Structure it in a manner wherein it becomes all the more lucrative for the seekers.
Yeah, absolutely, and very valid value unlock point that you are talking about. We are already working on it. We are, as you know, government RICO is a partner with us in the Mahindra World City Jaipur, and we are discussing with them how best to find ways for us to convert from SEZ to DTA. We already have experience of doing that in Chennai. We are sharing some case studies. It's also useful to see there is central level effort going on, given the lack of traction on many of the SEZs through the DESH bill, DESH bill, which will also help us. But you rightly touched upon a great value unlock point. We are working on it with our partners.
Sure, that answers. Thank you. Thanks a lot for answering my question, and all the very best for future.
Thank you. Thank you, Prem.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Amit Sinha for closing comments.
So very good. I think a good, very engaging 75 minutes of the discussion. Really appreciate the opportunity to address the question that you had. I just want to rehash 3 points I raised at the start of the meeting, that we are at a macro level, at the industry level, we see a huge buoyancy momentum in the market, and I think will continue for some time despite high interest rate, despite slowdown. The residential segment will continue to be a key part of the future growth, and I think that the flight to quality towards grade A developers, branded developers will continue to help some of us more than the others. So that was my first point about the overall market sentiment. I covered the key highlights of the business. We have a healthy sustainable sales that's reflected in Q1, but very exciting set of new launches that we have planned into, including the Kandivali launch, which we have a plan B in progress. And the third part I covered was our strategy to 5x, go from where we are to 8 to 10,000 crore of sales in the next 5 years, inclusive of IC business. And that is really exciting for us. And that's happening because of what we have delivered in the past few years, the strategy that we have articulated, which is augmenting the past work, but also the support we have from the Mahindra Group that we have. The IC business is a key part of extracting cash and helping us achieve the aspiration. And there are many other sources of capital that will help us attain that. So we look forward to staying in touch with you, sharing good news as well as any other news that we have, and continue to seek your counsel, feedback, and guidance as we continue our growth journey. Thank you. Thank you to everybody, and we'll be in touch.
Thank you. On behalf of Mahindra Lifespace Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.